DanielfX Traders is way much more than just a YouTube channel. We offer free quality trading education just like this one to help you reach your financial goals. We also offer affordable premium signals of my personal trades with a 95% win rate and a low percent drawdown with a variety of currency pairs and trading indices and much more. Ladies and gentlemen, welcome back to my YouTube channel. I hope you guys are good. Today we are going to be talking about liquidity and how you can make profit. Just before we do that, I would really appreciate it if you follow my Instagram. My Instagram is at danielfx.traders. I really want to hit 1,000 followers before the month ends. Today is the 6th of June. So just before we get into the video, I offer premium signals. Here are just some results from those premium signals for an affordable price. So there is the group. There are some of the signals that we send. There are some results. For an affordable monthly subscription, guys. Okay, without wasting any more time, let's get into the video. So today's topic is liquidity, guys. What exactly is liquidity? Let me open up my MetaTrader. I want you to think of liquidity as simply think of liquidity simply as a fancy word for money. What liquidity is, it's simply just money. So yeah, guys, liquidity is money. When we look at the candlestick, the structure of a candlestick, you have a body, which is this part, which is the part that is basically colored in, if I can say that. So you have the body, and then you have the wick. This is where price has been, not where the price has closed. So I want you to think of the wick as liquidity. Just think of it like this. Think of the wick as a tool they use to take money and then go in the direction. So if I can show you on the chart what I mean by liquidity, you have two types of liquidity. You have a order block and a imbalance. What an imbalance is, it is a space in the market, a aggressive move to one particular direction. So think of it as, I would say, this space in the market can be considered as liquidity. And this form of liquidity is an imbalance, because we said liquidity is a fancy word for money, and we have two types of liquidity: order blocks and imbalance. This liquidity is an order block. So we said a order block is an aggressive move to one particular direction of the same color. So you have a bullish momentum and a bearish momentum. So in this case, we have a aggressive move to the upside with no bearish momentum. And the way you identify an imbalance is you use the space where there was no price movement. So here, this is a large space without the opposite movement. So that is how you identify an imbalance. So now what happens with the imbalance is when you combine it with other factors, which I'm going to cover on my channel. So make sure you are subscribed. So when you combine an imbalance, or when you combine liquidity with other factors, your profitability will be increased, because this is very powerful, guys. When you use liquidity in your trading, you are moving with smart money. Remember, we have retail traders and smart money, or there's so many words for it: institutions, the big banks, but I call it smart money. These are the large entities in the market that have enough capital to influence the price. So we want to make sure that we are trading with them, not against them, and liquidity is the best tool to do that. So that is how you identify a imbalance. Now let's move on to our order block, or rather before that, let me show you this was a bullish liquidity. This one, let me show you a bearish liquidity. Okay, guys, if you look here, we said an imbalance. Think of the word imbalance. What does imbalance mean? It means that it's not balanced. So if it's not balanced, it means that one side is overpowering the other. So if you look to your left here, we had an imbalance. We had an aggressive move to the downside without bullish pressure. Bullish pressure is this blue candles. It's buying momentum. So we had aggressive selling momentum without buying momentum. Now that's the first step to identifying my imbalance. Now how do I identify? What is the second step to identifying my imbalance? I look for a large space without price. So this would have been my imbalance, because in this space there was no price whatsoever. What I mean by price, guys, is it's empty. It's literally one candle with no other wicks. Like here there are wicks, here there are wicks. So yeah, that was the first type of liquidity that we have, an imbalance. So now let's move on to the second type of liquidity we have. We have what we call a order block. Now what an order block is, it's simple, guys. The order block is the second type of liquidity that we have. Now how do you identify an order block? To identify an order block, you identify a high and a low, and then you mark out that high and the low. Like this. So you identify your high and your low. After doing that, you identify the zone that broke the high and the low. What do I mean by that? Is if you place your attention here, you can see that this zone that we just created now, using the high and the low, it was broken. Now you ask yourself, what broke the zone? It's this zone. What broke the zone? Yeah, it's this area right here, and then that will be your order block. So what you do is you identify the area that broke the order block, and then you can remove the high and the low, and then this zone is now your order block. In this video, guys, I'm just teaching you liquidity. Further videos in my channel, I'm going to teach you how to combine this liquidity with other factors. So once you identify your order block, you can remove the high and the low. So this is now your order block. Let me show you an example of a bearish order block. This was an example of a bullish order block. Okay, guys. So what would we say the first step is to identify a high and a low. And when you identify a high and a low, guys, you want to make sure it was broken. You want to make sure the high and the low was broken. So what I do is, there's a high and there's a low. So I identify those highs and lows. So there's my high, and there's my low. And then I highlight the zone that broke the high and the low. So I can see here that the low was broken, and then I identify the area that caused the move to break the zone. And then once I do that, I remove my high and the low, and then this zone is my order block. Okay, guys, that is it for this video. Stay tuned. Make sure you like, subscribe. And a wise man once said, do the work, do the hard work, especially when you don't feel like it.